Well, checking in on market news now, global stocks slid for a second day as major central banks delivered their final policy decisions for the year, with the U.S. Federal Reserve signaling that it expects interest rates to stay higher for longer. So far this quarter, global stocks have risen nearly 13%, marking their strongest quarterly performance for 2 years, based on the assumption that inflation is gradually subsiding and soon the Fed will indicate that it does not need to rapidly raise rates. Locally, however, retail holding company Steinhoff's share price plunged 50% after the company announced that it has reached an agreement with 64% of lenders to extend debt due in 6 months from mid-June until 2026. The deal will leave shareholders with 20% of what they hold, while the debt holders will take over 80% of the firm. The company will no longer be listed on any stock exchange. The company has a debt of 185 billion rand. If they do not agree to it, the shareholders will no longer have any interest in the group. However, looking at another key piece of information and a story that came out that has definitely piqued at least U.S. investors is around Chief Executive Elon Musk selling almost 22 million shares of electric car maker Tesla. And of course, everyone was concerned about where demand is going to come from, especially as we start seeing those demand issues in China. But we'll unpack all of that on another occasion. However, to talk to us about the latest when it comes to the markets, we are joined by Han Tang, who is the Chief Market Analyst at Exinity. Han, thank you so much for your time. I suppose let's start off by looking at global market sentiment following the Federal Reserve, announcement and some of the comments coming out.
Right. I think overall there has been a reawakening, or rather a reckoning with the Fed's hawkish intentions once more, despite the cooler than expected inflation number that we got earlier in this week. The Fed has overnight came out to say that they are far from done in this battle against inflation. That has prompted the unwinding of the optimism that we have seen from U.S. stocks all the way to gold prices, while bolstering the U.S. dollar once more in the interim.
What did you make of his comments around economic projections as well as the dot plot?
Right. I think, well, let's focus on the dot plot. I think there's still some skepticism about the Fed's intentions, about how high they can really move interest rates, in light of the sluggish growth of just 0.5% expected for next year, for example. As far as the market's consensus is concerned, there's bound to be a recession in the U.S. economy for the later half of next year. So that may well limit how high U.S. interest rates can go. And that's why there is still that skepticism as priced in by some segments of the markets.
If you had to think about what Powell has done since the beginning of this year, roundabout up until now, how would you rate his ability to manage market expectations? And would you say those expectations have been kept in check?
I would go maybe one step further and say I think those expectations really have been in contrast to what the Fed wants to do. So, keep in mind, coming into this year, the Fed was still holding on to their view that this inflation will be transitory. So, I guess, in perhaps less PC terms, this inflation problem was to some extent, or to a large extent, the Fed's own doing, right? So, on the back of that, it's hard for the markets to take the Fed's word at face value. Hence, this skepticism, not just in terms of the dot plot, but also skepticism about, the Fed's ability to really do as they say they would.
Prior to yesterday's Fed meeting, did you have a base case scenario for a recession in the second half of next year? And has that scenario changed at all following his comments?
Yeah, and the short answer is no. I think the base case scenario remains that we do expect a recession in the second half of next year for the U.S. economy. Although to be clear, we are not economists, so we are more than willing to be guided by the economists as well as Wall Street and what other signs are being shown in the markets.
If you had to look back at the year that was, just as we get into that holiday season, what would you say surprised you the most about the past 11 months?
Right. I think the theme that has the longer legs would be, of course, the Fed hiking at pretty much every single meeting this year. I think that was not expected coming into this year, again, on the back of the Fed's comments that they still viewed inflation as transitory. And of course, we have had, some really serious events from the Russian invasion of Ukraine. So that has jolted commodities and also the likes of gold prices down to the return of fundamentals, really, with businesses having to perhaps trim their headcount or, in light of not just rising interest rates, but making sure that their fundamentals are preserved as well. So I think those three areas would have been some of the surprises that we've seen this year.
Which is, I suppose, a nice segue into my next question, because we've touched on the recession, we've touched on high interest rates and inflation. Are there other themes or risks that you believe that we are going to be taking from 2022 into 2023?
Yeah, I think the Fed will still maintain its pole position in terms of dictating how markets fare going into 2023. I think, all eyes are still on that. But of course, we have to be wary about other potential risks, such as perhaps a resurgence of geopolitical tensions once more, although that has been kind of on the back burner since the invasion of Ukraine. But, it could open up on other fronts, for example, US versus China, for example. So I think those are some key things that we'll be looking out for, or at least framing our mindsets for 2023. But of course, I think as the year progresses, I think the thought of recession or the alarm bells around recession would only ring louder.
Quick question before I let you go. One key event that you're paying attention to?
One key event that I'm paying attention to for 2023, I think, will be the recession for the U.S. economy second half of next year.
All right, Han, thank you so much for your time. That is Han Tan, who is the Chief Market Analyst at Exinity, giving us his perspective on the markets and also helping us look back at the year that was.